Just now I was talking about this. So the announcement was made on 25th of August. The price not moving up higher. So 25th of August after market, then only they have the announcement made. So most of the investor would think that the price will have a price up or continue to push it up higher, because it has about like 80% of pricing profit increase, right? 99.88% of profit increase on quarter. So you can see from here, quarter on quarter, it announced on Thursday 25th, and it's on 5 p.m. Quarter on quarter is increased, but next day the price don't move up higher. It has a gap up, but it throw down lower. So a lot of retail investors would think like, why it doesn't move up higher? Isn't that a positive news? Isn't that a good news that the price goes down lower? So shouldn't it move up higher? And that actually makes a lot of retail investors get trapped inside that. So how do we know that we don't get trapped into these things like this? Then we need to know that you can see the price already pushed up higher before the quarterly earnings actually comes out. So they have already marked up the price so that they can actually take profit when the announcement is made. So that's why when you are trading based on this quarter result, then you need to be very careful on how you select it and before the price movement it is. And that's why you have to be very careful. And of course, most of you will start to think like, right now, it's still a lot of people think like, fundamentally it's good. Okay, so you might start to think like, continue to hold on to it but you never know until when. Okay, but so far in the 5-minute charts, we see there's a lot of selling pressure selling the price down lower. Okay, so it's just based on what we see from here is there's a lot of selling pressure, not much of the volume coming in to support the price at the lower point. So based on our analysis, okay, on our own point of view, it's most likely that they will have the price down. Okay, so be careful on how you select the stocks when you are a person that like to look into quarterly earnings. It's not saying that you can't trade or invest based on the quarterly earnings, but you need to know every time when there's earnings report are announcing, then usually the big boys will actually take advantage of this. So by checking out the price, and of course you can see this before the announcement actually made, they already check up the price. So that's why I'm not surprised that they throw the price down lower. Okay, because they need to take some profit, right? So if let's say you want to trade based on quarterly result, then we'll choose those that it doesn't move the price up higher. Okay, then we can look into those stocks for day trading. Okay, because usually they will push the price up higher in the morning and then they start to throw the price down lower later on, because they need to mark up the price to attract the buyers, create the volume, attract retail investors who come in. So that's why when you look into market, look into any of the trades, be careful of it. Like for example, this one is a very nice one. One of our students is able to make it. The earnings actually comes out on, the earnings is coming up on 19th of August. Here you can see 19th of August. So it's 12:45. So it came out at 12:45. 19 on this date. Okay, so before they announce at 12:45, then the price already gap up higher. So when the announcement is made, 19 was here. So when the announcement is made, so you can see the price start to go down lower when the announcement is made. So this is the thing here, that they will mark up the price to attract retailer. If it comes in, then they throw the price down lower so to sell it to them. So usually I always try to avoid to trades during the news time, but day trading is fine because you just move in and then with the high side you just get out. So if you want to know more on how we do the trades, intraday trades, morning trades, tomorrow we will be having our live stream session, so you can have a look into it, how we do this trading. But it's not for you to follow because there will be a time gap delay in the live stream. It's just to showcase you how we do day trading, and if let's say you are interested to look into it as well. So these are the things that we see how how we trade based on the quarterly earnings. So you can actually make profit out of it, but you need to know which one to look into it. And also you need to know whether at what stage are they, because the big boys is always they always have two stage of when they are pushing out the price. First one, they need to mark up the price. Why they mark up the price? Because they need to attract buyers to come in. Why they need to mark up the price to attract the buyers to come in? Because they want to sell it to them so that they can make profit. Okay, so understand this well, then you know you can actually you basically like 30% success in the stock market. So if you want to learn more, you can always join our training course. All right, so I would say that will be, if you join our training course, look into the big boys, all this will be the last training course that you will sign up. Why? Because we are not sharing the traditional technical analysis like the rest. I know some of you have been following us for a very long time. You know that we look into the market very different. We analyze much more detailed thing, understand more about the big boys than just plotting line and resistance, all this, which I find it doesn't make sense sometimes. I'm not sure whether you guys find it, because you find that there's a lot of things you cannot answer, where just enter and then wait for profit target. If it doesn't hit profit target, wait for it to hit cut loss. So why I can't take profit in the middle? And how do I know when to take profit in the middle when the price is moving up higher? So that's where I start to look into how these big boys do the transaction. So all this data is in your trading platform, so you don't have to worry about it. Okay, so you just that you don't know how to interpret it, and usually other courses they don't tell you, or not to say don't tell you, just that they don't share about this, how to analyze this transaction. Okay, so we don't use indicators also. All right, so upcoming market, of course earnings are coming up, and also we still look into the market as in short-term trading and stuff like that. But if we see some of it, maybe we can look into. So far I think it's not yet, because the price move up higher but doesn't have a lot of high volume coming in. Previously yes, so still the same, the price will be, the market will be very choppy, moving up and down sideways. So there are trading opportunity, just that you need to know how to look into it. So usually when you look into this, then I don't think that the traditional analysis will be able to help you, because those are easy for you. I mean, those are more effective, not to say effective, it's not really effective, but in a way it's more effective in the uptrend. So when it's in the sideways, then it's a little bit too hard. But it's not that bad in the market, so you can have a look into it. Slowly, you can look into some of the stocks that you want to go for long-term investment, to start to move in a little bit. It might be a good time for it, but need to see it properly, need to do the study properly. I mean, the study not just in fundamental, all those you can do your own study, but knowing whether the big boys are coming back in to mark up the price. Okay, are they ready to mark up the price for long term? So that is the question you need to ask whenever you analyze the stocks. If let's say your analysis is not able to answer this, then you need to find something to help you to understand this. Okay,